Welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. This is Trading the Close, guys. We're going to discuss a bunch of the market action today. We have a few different things. So number one, we saw the markets generally trend higher today. It was actually a little bit of a broader-based rally today. Even the Russell is up shockingly. I know that's shocking, but nonetheless, it was up a little bit on the day. Now listen, NVIDIA was down, but the rest of the Mag 6 or the rest of the Mag 5 there were to the upside. Apple leading the charge. I have an interesting chart on Apple to show you why I actually think we could be in a scenario for Apple to top out around 222. In addition, Tesla was the big mover today, up about 9+%. That actually hit a level I gave in the game plan this morning, and it now has reached its max move according to what I've looked at on the chart. So let's get into the action here, guys. If we click over here, we can see what the markets are doing. We have the Dow up 189 points, the NASDAQ up 120, and we have the S&P up 35. And you can see for the first time in a while, these are generally in alignment, 0.5%. It's 2/3 of a percent, 2/3 of a percent. Now the Russell again is lagging a little bit, only about 0.3%, but at least the Russell is higher. Or the oil trade. This is an interesting one. This morning in the game plan, I talked about how oil was pushing up above my triple threat resistance line. Well, guess what? By the end of the day today, it's reversed back to the downside. And this is what happens at these major levels. This what we call a bull trap. They push it above, get everyone thinking it's going to break out. No, no, no. Not above 3 trend lines. That's unbelievably rare probability-wise. And we saw a reversal. We're going to look at that chart as well. Gold today flat to negative, and Bitcoin is pulling back just a little bit off key resistance. We're going to look at that chart. Now, just looking at the heat map, here's NVIDIA down about 1.85%, but Apple compensating for that along with Microsoft. Google is having a good day. Meta's having a good day. So the other big players out there, the ones that can lift the market even without NVIDIA, they are doing just that. Then you go over here, and there is a fair amount of red still. So let's be fair. For a market that's up 2/3 of a percent on the NASDAQ and the S&P, there's a lot of red over in this vicinity, all the way down in utilities, healthcare, and some of these other sectors out there. So just something to keep in mind. All right, let's go into some key charts here and see what the markets are doing. This is the S&P 500. Now, just a reminder, today the volume is very, very light. It's likely to be even lighter tomorrow because Thursday we have the July 4th holiday here in the U.S., and the markets will be closed. In fact, tomorrow is a half day for trading U.S. equities. All right, now if we look at the chart here on the S&P 500, we started right down here with basically a flat to slightly lower open. We then floated up in the entire day. I mean, look at this gentle kind of slow grind higher with a little bit of short covering at the end of the day to push it up to the highs of the day. So again, just a float day. Really, that's what it was. It was just a float day to the upside. Jerome Powell did make comments this morning, but he towed the line perfectly. He basically talked about how they see inflation coming down, disinflation as he uses the term, but at the same time, it's too early to start cutting rates. And again, that's what he's saying. That's what you have to expect him to say. He's not going to come out and say anything different because he has to stand his ground. Any sort of weakness from the Fed in terms of cutting rates too quickly or any sort of comments about inflation coming down too quickly, and the markets would go up even to new all-time highs, and that's inflationary. We have to be honest. Anytime the markets make new all-time highs, the group of Americans and people that have a lot of investments, they make a lot more money, they go out and spend. Everyone else is left in the dust. We know what the stats are with seeing some of these hardship loans on 401ks and delinquencies on credit cards. There's a huge group in the U.S. that is not doing well right now, but anyone who's heavily invested continues to do very well. All right. A couple other tidbits here on the charts that we want to go over. What am I looking at here? Well, number one, let's go to NVIDIA today, which right now is down about $1.70 on the day. Just remember, the patterns are the dominant force here. It doesn't matter what I think, doesn't matter what you think. It's the patterns. And right now, you still have a bearish pattern on NVIDIA, classic bearish pattern. It hasn't broken down yet, but nonetheless, the probabilities, if you look at 1,000 of these chart setups, you would see about 700 to 800 of them break to the downside. The other 200 to 300 would maybe go up. But again, probability-wise, if you're looking at an odds are it heads to the downside in the not-too-distant future. And it's down today, but not really that much. One of the kickers today is Apple. Take a look at Apple trading above 220 right now. Big move today, kind of compensating for NVIDIA being to the downside, up about $3.60. Notice this longer term trend line. I want to zoom out and just show you this, guys. This is a great trend line here. It connects all the way back to this high here, going back to June or July of 2022, your high in 2023. We hit it right over here, pulled back. Notice how every time it hits that line, you are getting a pullback. Now, one thing just to take in mind here, if we do a quick trend line here, guys, and we take the COVID low and connect it to the low in 2022, we actually get a perfectly parallel line. So this line here, and this is pretty cool stuff, this line here connecting through this low and this low is perfectly parallel to this one up here. And what this signals to me is that there should be significant resistance up in this zone for a bigger pullback off around the 222 hit of this trend line. We're not there yet, so there might be a little bit more upside tomorrow, maybe on Friday, we'll have to see. But right now, that would be the angle to look at for that move to the upside just a little bit more before it starts to correct. Let's talk Tesla, guys. Amazing move on Tesla. In fact, it looks like it's at the highs of the day. Little end of day short squeeze on Tesla here. But look at this bigger parallel or wedge pattern, I should call it. So it's a wedge pattern, basically a triangular pattern. And notice again, going back to the highs in 2021, all the way down, and now we're into this upper level around 230. Looks like just now we've closed just above it on a late day short squeeze, which is very normal. You get a lot of traders that are shorting it throughout the day. It really didn't pull back that much throughout the day. Therefore, those traders that are day traders, they're using 4-to-1 leverage. They can't hold that overnight. They tend to have to cover into the end of the day, giving it that last little juice to the upside, and that's what we saw here on Tesla. So again, Tesla's into very important resistance, 6 days up in a row. That's what we call a kind of a coming into a time count factor, which probably to me tells me a pullback is either tomorrow or Friday in the stock. Now, how big of a pullback? Probably not that big. I mean, maybe back to 225, maybe a gap fill back here at around 215, somewhere in that vicinity. But nonetheless, technically speaking, it's now run into resistance. By the way, for those of you that remember, I was long right down here at these lows based on this same metric, using this lower channel line. That was a beautiful level to go long. Wish I held it all the way on the long side. I did not. But nonetheless, it was a technical buy down here. Now it's a technical short up here, and you'd expect a pullback of sorts right there. All right, let's go to Bitcoin and see what's going on in the Bitcoin world. Then we'll take a look at some other things here. Bitcoin is pulling back just a little bit. Notice you had this wedge pattern. We broke above it. And notice how, and this is how you know a trend line is accurate, right? Is that when you have a level like this, right, you break above it and then it becomes support. And you come back in and hit it here, 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 and here before you broke back in. And then where did you go? You went right back into the lower trend line right here. And notice how we tagged it right there just yesterday and are getting rejected off of it. So what does this mean? Well, when you get a wedge pattern, right, when we talk about a wedge pattern here, basically a triangular pattern, price is essentially winding like a spring inside of it, and it tells you that whichever way it breaks, you're likely to get a very big move. So if we break to the upside, I would guess you'd at least go back to these highs, maybe the all-time highs on Bitcoin. But if you break to the downside, you'll have support at around 56,000 and then 50,000 to the downside. But again, this is that same pattern. It's winding inside of this range. It's getting tighter and tighter and tighter. It's going to have to break one way or the other, probably within the next week, maybe on the jobs data that's coming out either tomorrow or Friday. ADP private sector job number tomorrow at 8:15 in the morning. And then we have the non-farm payrolls on Friday for the markets. And that will influence the dollar. It'll influence the Federal Reserve's probabilities of cutting rates, all of those fun things. Okay. Here's your gold chart. Gold did almost absolutely nothing today. It continues to be in the same sort of wedge. Notice there's a lot of wedges right now in the market. It tells you that there's not a lot going on in the market. It's waiting to figure itself out from the metals to the Bitcoin chart, even to something like a Tesla, right? Tesla's at the high end of that range. So ultimately, same kind of deal. It's the spring is winding tighter and tighter and tighter. You're looking to see, does it break out here or does it break down? If it breaks down, 2190 is your downside target. If it breaks out, you should retest your high around 2450 or so. Couple other charts just to quickly go over. The biggest one for me, and this is the one that I love the most, is this chart on oil. So oil, I talked about it this morning. We talked about how you have, and I've talked about this chart to you guys a long, long time. Trend highest point from all the way back here in 2023, connecting to our highest point here in 2024, and we were right into that level. You then have your head and shoulders neckline right there. Then you have your down upsloping trend line from these lows right through here. They're all converging in this one spot. I'm going to zoom in on this spot, all right? So let's take a look. If we zoom in on this zone, we can basically see that those lines came right together. This morning we were trading above it, and what happened by the end of the day? Rejected, and it got back underneath those levels. That's very common. It's weird. It's almost like there's a plan there to kind of fake out the retail crowd or fake out some of the institutions where it goes above, people think, oh, it's a breakout, let's jump on board, and then it's kind of like a pull the rug out from under you type scenario, and it comes back in. Now, if this was a higher high, this would be a topping tail today. It's not, so I wouldn't classify it as a full-out topping tail, but nonetheless, it is a reversal, and the mere fact that it closed back below these lines, to me, continues to reinforce the bearish call on oil here. So I still think oil is going to head down. I think, again, it probably got jacked up. I mentioned the hedge funds were caught kind of short, overly short. They had to cover some. That pushes price up. Then you throw in the July 4th travel holiday. Well, the big oil players have to raise price and get price up because they know people have to drive, so let's get as much money from them as we can. They push it up. Once July 4th's over, in general, you see a fade on that. And also, remember, if we start to see lower jobs numbers, then people will start to price in lower demand for oil in the future, and that will bring price in. All right, last couple charts I want to go over here, just natural gas today. I think that's a very interesting one as it continues here. It did get a little bit of a bounce here, but nonetheless, you can see the rollover on nat gas. It did bounce a little bit, but here's my buy level. Should nat gas get into that, that's a really, really good level. Now, I want to be clear. Just because I have a level there doesn't mean price has to go there. It can do whatever it wants. What I do as a technical trader and what we do here at Verified Investing is we focus on the high probability levels and we wait and we stay disciplined. And if price comes into that, then we know what we do. If price doesn't and does something different, well, probabilities aren't in our favor. We're not going to take the trade. It's all about the levels, finding multiple factors. Kind of like what I just showed you on oil, that's a high probability setup. Unless natural gas dumps in the next, let's say, 1 week down into this level, it's just not a high probability setup, and then we'll just watch the continual action to see when that setup gets high probability again. And it could be that we end up going up here, and I would short it up here, right? You have two trend lines converging over here. Maybe price goes up there. You don't know, and that's the beauty of it. Be kind of agnostic, if you will, in terms of your biases, and just let the charts tell you. And that's what we're here to do, folks, is guide you, to teach you, to educate you, and ultimately help you make something better of your financial future in these general hard times. All right, on that note, I'm going to say goodbye, guys. Don't forget, Trading the Close will be tomorrow at 3:55 p.m., even with the markets closing early tomorrow. I'll still do Trading the Close. And don't forget, game plan tomorrow morning, 9 a.m. You guys take care. Talk to you soon.